All right. Today is Monday, June 6th, and this is a recap for the stock market activities today. Folks, I got a good one for you tonight. And if you had a bad day, you better cheer up because it could get a lot worse. For example, look at this. A Florida man died while searching for frisbees in a gator-infested lake. Yep. And folks, if you think this whole life and this world is just a dark comedy, you're probably into something because look at this. Scientists say that aliens created our universe in a lab. So all of this is just a simulation. We're just playing in somebody else's video game. And all of these aliens are looking down and laughing their asses off at us. But folks, back to reality land, or, the stimulated reality, in case the aliens are listening, the sentiment about the economy is getting sour by the day. You heard Jamie Dimon, Mr. Hurricane, and then you got Super Bad from Tesla, Elon Musk, and now we got Cardi B. Cardi B is gloomy about the economy too. She says, "You think they're gonna announce the recession for us?" Of course not. And she's right. A lot of people say, hey, a recession is not going to happen because the economy is hot. Have you forgotten about 2007? The economy was hot back then. Everybody's getting houses, jobs all over the place. Salaries moving higher, and then kaboom, the whole thing came down crashing. There is no soft landing or gradual crash. It happens right away, fast. One day you're at the top, the next day you're down in the trash. And by the way, rumor has it that Cardi B is a regular viewer of the show, so welcome aboard. And before we move on, yesterday, we talked about the tip jar. YouTube, of course, told us that if you want your viewers to become more engaged and create more revenue, announce the tip jar. So we did announce the tip jar, and guess what? YouTube took it off. And the reason is we got a copyright strike on the last video. You see, I use memes and sometimes I use little bits of music and movies to make the videos more colorful and entertaining. But once in a while, we get hit with the copyright strike and YouTube holds the money. And this is what happened in yesterday's video. Now, usually these things get resolved, but in this video, I'm not using any music or scenes from movies or anything. So probably the tip jar in this video will be available. All you have to do is click on the thanks button and leave a tip there. So thank you to everybody who contributed in yesterday's video. And before that, it gets me a little closer to becoming a full-time YouTuber. And I'm going to start reading some of your comments. Here's one of them. The viewer says, "Thanks for everything, Maverick. At some point, maybe when the market settles a bit, any chance you could post a video about you, your background, and how you got to where you are? Question mark. Thanks again, and looking forward to more amazing analysis." Thank you so much for the comment and the contribution. Yes, I'm planning to do that video because I think you deserve to know me a little better, but you might have already caught up to the fact that I'm not really that into myself. A lot of folks would do anything for fame, not me. And maybe that's why I prefer this format rather than having me flipping a camera and babbling for 20 minutes straight, nothing but gibberish. Instead, I choose to value this channel by the information and the analysis. Now, that doesn't mean that I'm hiding for a reason. I know there are a lot of conspiracy theories. People say that I'm a secret hedge fund manager or a CIA or whatever. I'm none of that. Matter of fact, I'm nobody. The most shocking fact would be when you find out that I'm actually nobody, like just a regular guy. But yes, I will do the background. Some people say I should do a movie about myself, a book, whatever. I'm not that really into myself. But if there is an element that is inspiring and motivating for others, then sure, I'll do that because when you really think about it, I came to this country as a teenager, 17, 18 years old, no friends, no family, did not even speak English when I came here, and here I am. So the American dream is still alive, but it is dying by the day. Can we revive it? Of course we can. And maybe when you hear examples about it that is still alive, that would be motivating for others. But again, I have a lot of folders right now, video ideas. I would say at least 20 of them. Among them is the background video. But where is the time? By the time I get to these videos, the information is already outdated, and that is a big problem. But one of the folders I'm working on right now is about Michael Burry, the Big Short. And when you do the research about this guy, he's not that really into himself either. He's just letting his work speak for him. The guy doesn't do interviews. He's not into the spotlight at all. And I do view that as an example to live by. Michael Burry is a great role model. But anyhow, I just wanted to get that out of the way. Yes, we're going to do a background video. Many more. But this tip jar is just a small step toward me becoming a full-time YouTuber. So thank you for everybody who's contributing. And with that, let's move on because we got a lot to talk about here. And here it is, in focus tonight. The EV paradox, how things backfired. Let's start with this. Today we got the news that Joe Biden's inner circle, including his wife and his sister, are complaining that the staff is handling Joe Biden with white gloves. They're not letting him go. They're not letting him be Joe himself. And they're blaming the disastrous poll numbers and the lack of appeal on the White House on the handlers, preventing Joe from becoming Joe. Now here's the problem. Every time Joe becomes Joe, it's a disaster and they have to walk back what he said, and it ends up backfiring. And in reality, folks, this guy's not really leading the country. And I think we all know it by now. This guy's just a front, a cover-up, a facade. And they're going to throw him under the bus when things go sour. The folks who actually lead the country right now is the cult of the deep state, globalist, green oligarchy. That's who. And their agenda is not aligned with the working class of this country. And therefore, we're seeing all of these problems. Inflation, an economic disaster, wars all over the place. Because their goals are not the goals of the working class of this country. Now, we talk about the oligarchy and the impact they have on the Federal Reserve a lot of times in this program. We talk about how the deep state is getting us into wars, unnecessary wars and conflicts all over the place that the majority of the American people have absolutely no interest in. We talk about the globalist part, the World's Economic Forum and the rest of them, and how their agenda is not aligned with the American people's agenda. But we seldom talk about the green part and how the greenies got us in trouble here by not thinking strategically. And in doing so, they're going to push this inflation higher and higher and higher. And in this case, it all boils down to the EV lunacy, the EV paradox. They've been pushing for this agenda for a long time. And once Biden became president, the EV agenda accelerated. And we heard from companies like GM and Ford announcing that they're going to go all electric by 2030 and beyond. And they started to scrap assembly lines for traditional vehicles and building assembly lines, new assembly lines for EVs. In essence, auto manufacturers in America went all into the EV mania. The problem in doing so is they put all of their eggs in one basket that they're going to be able to achieve their goals in producing electric vehicles that are going to be affordable to the American public. They're going to be out in timely manner. Now, you combine that with the anti-oil and gas energy by the administration, and you have a lethal combination for inflation. This is what I tweeted back in March. The aggressive transition to the so-called green energy is a lose-lose situation. On one hand, supplies of oil are reduced, leading to higher prices. On the other hand, the soaring demand for materials related to green energy leads to higher prices. Inflation is here to stay. We did not invest in refineries for oil and gas. We've been demonizing oil and gas for a long time. Now, some of that criticism is understandable and merited because the oil and gas industry is not led by a bunch of angels. We've had oil spills and a lot of pollution throughout the years. But the approach taken right now is not gradual in nature. For example, we did not encourage the oil and gas industry and invest in the oil and gas industry to become greener. We decided to demonize oil and gas altogether and move all eggs in one basket in the renewables, and in this case, in electric vehicles. But we did not have a plan for the gradual transition, which is the way it should have happened. And of course, it all ties in with the corruption. Your beloved dear politicians used to be invested in oil and gas, not anymore. They bought shares in electric vehicles and renewable energy manufacturers. And of course, they want to pump and go all in promoting the green/EV agenda. That left us with less refineries to cope with this demand. On the other hand, we're also seeing increased demand for the materials that go into the manufacturing of electric vehicles. This combination leads to higher prices for EVs, a shortage of supply for newer cars. It also leads to higher gas prices at the pump. And this is what we're seeing right now. Take a listen.
I don't want to sugarcoat that. The driving season is beginning. There will be more demand for gasoline, more demand for oil. That will cause additional upward pressure like it does every year, but now it's on top of already high prices. So this is going to be a rough, from now through the end of the year, really.
Now, the Secretary of Energy, Granholm, is absolutely incompetent, and she should not even be trusted to make a cup of coffee, let alone leading the energy department. Now, remember, last year she was asked about this, that we're seeing soaring gasoline prices at the pump. What is her plan in increasing the supply of oil to relieve consumers at the pump? This was her response. Take a listen.
What is the Granholm plan to increase oil production in America?
Oh my God, that is hilarious.
So yeah, laughing as if this is a laughing matter. This is the Secretary of Energy laughing at you while you feel the pain at the pump. And then again, when she was asked about the average gas price in this country, she didn't even know, and she responded sarcastically. Take a listen.
The last time you filled your car up with gasoline, do you know what the price, remember what the price was?
I drive an electric vehicle.
Okay.
So again, the Secretary of Energy is doing wisecracks, sarcastic answers to the pain that you and I are feeling at the pump. No regard, no empathy at all. You don't like the higher gasoline prices? Poor you. Get yourself an EV. This is the response from this administration, led by the Secretary of Energy, because it's all part of an agenda. You think they feel empathy for you when you're paying $100 to fill up your gas tank? Of course not. They see it as an encouraging sign that the consumer will be forced to shift to EVs. The problem is, where are the EVs? And how affordable or unaffordable are they? Well, here's your Secretary of Transportation. Take a look.
Secretary Pete, I am with one of our great DOT electric vehicles and excited to go pick up a friend who's going to share some news on the future of electric vehicles in this country. There she is. Hey, hop on in. Can't believe they let me drive this thing.
Wish me luck. Just kidding. I know I'm in good hands.
All right.
So again, in their bubble, this is all funny. This is all working as planned. No problems at all. Get yourself an EV and stop complaining. And by the way, what happens when the Department of Transportation and other federal government agencies compete in the EV market? They have unlimited pockets. If Ford has a limited supply of the Mach-E, for example, and I, as a consumer, competing against the Department of Energy, the Department of Transportation, who have an unlimited budget, and they can bid these prices higher. And of course, the whole goal from changing their fleet from regular cars to EVs is to virtue signal. That's all. But by doing so, they took that supply away from the consumer. And by the way, Pete, here's an example for you. This is from Ford dealership here in San Diego, where I happen to live. This is the Mach-E that they have, and it's in transit, so it's not here yet. The price that I'm seeing right now is $53,000, okay? Now, the price for the Ford Escape, which is not an EV, and not a hybrid either, the cheapest model from Ford is at around $35,000. Now, this is a difference of about $20,000. Now, do you really think that the American consumer has $53,000 laying around? The majority of Americans are actually living paycheck to paycheck, and they don't even have $500 saved for emergencies. Now, let's say that you're a consumer and you must buy a car now, a new car. You have no other choice. You need a car, you gotta buy it now. You have a choice between the Ford Escape at around $35,000. You have the Mustang Mach-E, which is an EV, at around $53,000. Which one are you gonna go with? Now, Mayor Pete might argue that in the long run, yes, you're paying more in the sticker price for an EV, but the savings are worth it because you're not paying for gas. The problem is, who has $20,000 almost just laying around, under the mattress, under the couch? Unless, of course, you're the California woman who found $36,000 cash inside the cushion of a free couch she got from a family on Craigslist. But besides that, nobody has that kind of cash laying around. So yes, I know in the long run, an EV is going to save me money, but I don't have that cash right off the gate. And by the way, $35,000 for a Ford Escape, that's too much already. Who can afford that? A regular family, a working class family. Nobody can afford that. So when these monsters, like the Secretary of Energy, for example, keep saying, oh, poor you. You don't like the high gas prices at the pump? Get yourself an EV. If only that was easy and affordable, Mrs. Granholm. And by the way, you should not even be anywhere remotely close to a position in the government making decisions in our behalf, because you're a corporate tool beholden to the oligarchs and their agenda. That's all there is. And you wonder why we're in trouble now? You wonder why we have this insane inflation going on? You got Janet Yellen, Yale graduate, former Fed chair, and she got it wrong all along on inflation. Meanwhile, you got a douchebag on YouTube who barely graduated college, got it right from the get-go. Why? Because we have ideologues leading the government right now. We have tools who are beholden to the oligarchy leading us right now, and they're not taking decisions that are aligned with the American people's agenda. They're taking decisions decisions that are aligned with the oligarchy's agenda. And this is why we're in trouble right now. Mrs. Granholm is no different than Janet Yellen. She got it wrong from the get-go. She went all in the renewable green agenda to please the oligarchs, her sponsors, and she got it wrong from the get-go. Now here's the problem. And even Joe Manchin, Senator Manchin, agrees with me. He said that he has grave concerns about moving too quickly toward an EV-only future. Now, Senator Manchin, of course, is beholden to the coal industry and oil and gas companies. But he's right in this case because the transition is not gradual. And a lot of mistakes have been made leading to higher inflation. And spoiler alert for you, this inflation is not going to be relieved anytime soon. Why? You see, when you encourage all of these companies to go all in the EV agenda, scrapping assembly lines meant for regular cars and building new assembly lines for EVs, okay, now we have all of these manufacturers in America, in Europe, in Asia, all competing to produce more electric vehicles. And now we have a dynamic where we have soaring demand for the supplies that goes into the manufacturing of EV batteries. Now, are these supplies ample? Are they all over the place? Of course not. We have a scarcity of supplies, and now we have this dynamic where the EV manufacturers are pushing the demand higher for these materials that go into the manufacturing of EV batteries, the likes of lithium, nickel, cobalt, yet the supply of these materials is not widely available. See, the mistake from the get-go was they went all in with the EV agenda. Okay, we're going to scrap the assembly lines. We're going to produce EVs. That's the easy part, but they forgot about the supply. They forgot about lithium mining, nickel mining, cobalt mining. Who's going to produce the batteries? Are we going to be reliant on foreign countries for these supplies? If that is the case, then what is the point? The whole point of shifting from oil and gas to EVs and green energy is to be independent from foreign countries. But they did not think about that side. They thought about one side. If we just announce that GM is going all electric, the stock is going to shoot up higher. They make more money, but where is the supply? That is the missing part. And this dynamic is leading to higher prices for EVs. That is, if you can find them to begin with. As you can see, there is clear correlation between the sales of EVs globally and the price of lithium. Matter of fact, look at this. The lithium carbonate prices in China, all-time highs, a nearly 500% surge, five-fold since April of last year. Lithium prices are moving significantly higher because the demand is too high, the supplies nowhere to be found. And by the way, this dynamic of demand outpacing supplies for lithium is projected to be with us all the way till 2026 and perhaps beyond. Are you starting to see the disaster that is about to happen here? With the era of cars costing you $20,000, $25,000, even $35,000, those days are going to be gone because the new cars that are going to be available, when they're going to be available, which nobody knows when, but when they become available, they're going to be too expensive for the average consumer. 50 grand minimum, if not more. What does that do to used cars prices? Are you starting to put two and two together and finding out that inflation is not going to go down anytime soon? You're on the right track, baby. Look at this. Single-handedly, electric vehicles are pushing the demand for lithium. So by the end of the decade, 2030, we're going to need 5 times the amount of lithium that we're consuming right now. The vast majority of that demand comes from EVs. So we know the demand is soaring. Again, where is the supply? Even Elon Musk is appealing for more lithium production to meet battery demand. And things are getting dire here because they're seeing what's about to happen. They're seeing the disaster in the making. And the White House is now responding. They haven't taken action yet, but senators are urging the Biden administration to invoke the Defense Act to produce these much-needed battery materials. We're talking about lithium, nickel, cobalt, graphite, and the rest of them. Because it's not just lithium that soared higher. All of them soared higher. The prices of nickel, cobalt, all moving higher because the supplies are nowhere to be found for now. It takes years to develop these mines' operations. The supply, in the case of cobalt, lithium, nickel, graphite, and the rest of them, got a severe shock from the sudden an instant pop in demand. See, if the increase in demand was gradual and rational, we would have not overwhelmed the supply chain in lithium, cobalt, nickel, and the prices would not have gotten this high. But leave it to the geniuses, of course. Granholm, Biden, Yellen. You think this ship is not going to sink? Think again. But the good news is you get the folks, the pumpers at Goldman Sachs, who say that the prices of the three key battery materials, we're talking about cobalt, lithium, and nickel, have already peaked. Now, do you trust Goldman Sachs? Of course not. I'd rather trust the scientists at Toyota who say surging battery prices and shortages of metals and materials are likely to last for some time. And here's the bad news, folks. It's not just cobalt, lithium, and nickel. It's also chips. We have a severe chip shortage. This is not a surprise to any of us, specifically regular viewers of this channel. Now, guess what? According to the Commerce Secretary, this is another hack, by the way, beholden to the oligarchs, the average electric vehicles has about 2,000 chips, roughly double the average number of chips in a non-electric car. This is, of course, Raimundo, and she was giving remarks to the Detroit Economic Club. That's another satanic cult. And is there any relief in sight when it comes to the chip shortage? Of course not. Listen to Intel CEO, who now expects the chip shortage to last into 2024. Uh-oh. What are we going to do here, folks? How are these EVs ever going to be manufactured when the supplies are nowhere to be found? What happens between now and then? You put two and two together, new car prices, these are the non-EV new cars, the prices on those will continue to stay higher, thus supporting inflation higher. Likewise, the prices of used cars will maintain higher prices. The inflation in used cars, which many observers, by the way, assume to be transitory. Well, it's not going to be transitory because there is no new supply of cars. They went all in with the EV lunacy, and now we got no more supplies, baby. Your beater car, the piece of junk, well, that's going to be worth more than gold. Or excuse me, Bitcoin. And by the way, is the increased demand for lithium, nickel, cobalt actually green in nature? Is lithium mining, for example, really environmentally friendly? Of course not. It uses a ton of water. Matter of fact, there is a dark side to the EV lunacy. Do your own research, by the way. Don't take my word for it. Lithium mining, nickel mining, these are destructive to the environment, producing a lot of waste. And oh, by the way, using a ton of water. Approximately 2.2 million liters of water is needed to produce 1 ton of lithium. But the good news is we can export that pollution to the poorer countries again. So we can virtue signal with our EVs. We can have clean air in Europe, in America, in Canada. Or we can export all of that mining pollution of lithium, nickel to poorer countries. This whole lunacy is just another form of environmental colonialism, in my opinion at least. Listen to BMW's CEO who warned against the EV-only strategy. This is important. When you look at the technology coming out, the EV push, you must be careful because at the same time, you increase dependency on very few countries. I wonder which countries these are. Zipsy said at a roundtable in New York, highlighting that the supply of raw materials for batteries was controlled mostly by China. If someone cannot buy an EV for some reason but needs a car, would you rather propose he continues to drive his old car forever? ? If you're not selling combustion engines anymore, someone else will, said Zepsi, whatever his name is. I don't know if that's the correct pronunciation or not. Now, he's onto something because who happen to be the largest producer of lithium? Which countries happen to be the largest producers of lithium? Maybe this is a little hard to read, so here it is. Number 1, Australia. Number 2, Chile. Number 3, China. And the U.S. is not even close. Now, in theory, the United States has deposits of lithium more than China, but Bolivia comes at number 1, Argentina number 2, number 3, Chile. So it's mostly South America. And of course, it's not a surprise that the CIA conducted a coup in Bolivia, and Elon Musk celebrated that by saying, "We will coup whoever we want. Deal with it." But forget about the reserves. In reality, who is the largest producer of lithium on the planet? The answer is by far China. Chile, Australia, not even close. When we talk about the lithium carbonate that we actually need in batteries, China is the number 1 producer. So this EV lunacy and the aggressive push for EVs is actually making China richer. What about nickel? The nickel pickle, this is according to the Wall Street Journal, by the way, is also a warning to the climate lobby that wants a hell-bent transition to green energy. EVs rely on metals like nickel and lithium that are mined in countries like Russia and China that don't share American interests. The top producers of nickel, number 1, Indonesia, number 2, Philippines, number 3, Russia. Where is the U.S.? Nowhere to be found. How about graphite? Another critical component for EV batteries. Now, who happens to be the top producer of graphite across the world? Surprise, surprise, China. Da, 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 da. Have you noticed that everything that this administration does ends up benefiting China? I wonder why. And then, of course, the reserves for graphites, number 1, Turkey, number 2, China, number 3, Brazil. Of course, the United States is nowhere to be found. And is this really going to work at the end of the day? Is the EV lunacy the key to answer the climate challenges? Of course not. Look at Norway, for example. Half of the cars in Norway are EVs. Did that push oil consumption in that country down? Of course not. It remains the same, pretty much. Is oil production down in Norway? Of course not. So what is the point here? What are we doing here? And here's the problem, folks, for us consumers. New cars are expensive and they're nowhere to be found. So you have to resort to used cars. Well, used cars prices are surging, led by vans, of course. The new American dream. Forget about a house with the white picket fence. That's back in the 50s. Now, the American dream got reduced to a used van. Yep, because your other choice is to be homeless down the street. We're seeing it all over the place. Every city now. Tents all over the place. Every bridge, every highway. Homeless all over the place. But used cars prices are not going to go down. I mean, last year they said used cars prices, the inflation in used cars prices is transitory and it's going to go down. And it keeps going higher and higher and higher. Look at this pattern here from the Manheim Index. Can you assume that this is the top? Of course not. You have to assume that what happened in the past will continue to happen until we see a reversal signal. Do we have any reversal signal here? Of course not. So the assumption is used cars prices are going to go higher. How do you get it down? This is the important question because the answer is not going to be more supplies of new cars. That's not going to happen. So the answer, once again, ladies and gentlemen, pushing unemployment higher. Unfortunately, when people lose their jobs, they get rid of their cars, thus increasing the supplies and pushing prices down. How do you increase unemployment in the economy? You push interest rates higher, meaning the Fed will have to do more, a lot more tightening than they think they have to. And of course, I must close the segment by the great George Carlin, who said, "It's a big club, and you and I are not in it. But most importantly,
they got you by the balls."
Anyways, we're going to move on here and cover the stock market for you. So let's do that, and we start with the performance of indices today. And here we go. The Dow Industrial Average closing flat after opening up gapping higher. It was one of those days where a lot of pies got served. With that being said, the Dow closing in the green by 16.08 points, or a gain of pretty much flat, nothing. How about that? What about the Nasdaq? In the green by 48.64 points, or a gain of 0.40%. The S&P 500 in the green by 12.89 points, or a gain of 0.31%. What about the sectors' performances today, led by number 1, capturing the gold medal, cyclicals, aka the Chinese stocks, and number 2 for the silver, communication services, number 3 for the bronze, materials. Meanwhile, the laggards of the day led by healthcare, REITs, and technology. What about the advance to decline ratio? NYSE 59% advancing versus 38% declining. The Nasdaq 48% advancing versus 49% declining. Commodities, what's going on here? Muted action for crude. Nothing's going on here. Both the WTI and Brent, even gasoline, the RBOB, was pretty much flat. Yet we have sizable declines. Heating oil, for example, closed the day with gains of a little over 2.5%, but the party boy remains natural gas. Look at these gains. Over 9% in a single day. Nat gas is about to close at $10. Wow. Now, when it comes to crude, we had some tailwinds, some headwinds today. The tailwinds came from Saudi Arabia, who hiked oil prices sharply. But here's the catch. Saudi Arabia's Aramco, the world's largest oil exporter, hiked prices for consumers in Asia, northwestern Europe, and the Mediterranean. But prices for the U.S. consumer were unchanged. I wonder why. What kind of bribe is Joey B preparing for Saudi Arabia? We know he attempted to bribe India with $4 billion in cash to export more wheat, but India said, "Get lost, $4 billion is a low baller. We're not interested, thank you." So how many billions does Joey B have to bribe Saudis with for them to produce more oil? It's all courtesy of the taxpayer, of course. You and I, baby. But the headwind for crude came from Venezuela. All of a sudden, the U.S. is now allowing Venezuela to ship oil to Europe. Now we know what's going on. They're boycotting Russian oil, and we all ask the question, what will be the substitute? Because if you're not getting oil from Russia, you short in oil. Here's the answer. Venezuela, the thriving democracy of Venezuela, which I remember just a few years ago, the deep staters and President Trump in the State of the Union was telling me how bad Venezuela is. A dictatorship that must be removed. We must have a coup in Venezuela. Now all of a sudden Venezuela are the good guys. Anyways, back to the futures. What about softs? The decline in lumber continues to go on. This is an early warning signal for the housing market, by the way. Lumber is down about 4% today. So any relief we're going to get from the CPI, the CPLI, will happen from lumber because lumber is down big. But besides that, forget about it because while we have modest declines for both cotton and OJ futures, we have sizable gains for cocoa. Cocoa is up over 2%. So is coffee, up almost 1.5% today, and then we have sugar up by almost 1.5% today. What about metals? Muted action for gold, but we're seeing some gains here for silver and platinum, palladium, all closing in the green, while we have copper declining by almost 0.75% today. What about meats? Down across the board, led by the new big tech lean hogs, getting slaughtered today, down a little over 1.5%. Likewise, feeder cattle futures, live cattle futures, all down for the day. But the bad news from the avian flu continues because we have millions of turkeys that are poof, gone. And by gone, I mean they got slaughtered because they got the flu. 2.5 million in Minnesota, 1.6 million in South Dakota, and it goes on and on. We short millions of turkeys. What about grains? The majority of the action was in wheat futures, up by 5.5% today alone. Unbelievable. And then we have rough rice. I've been talking about rough rice for a while now. Today was up by almost 2.5%. And then we have corn up by a little over 2%. Canola, similar story, up by a little over 1%. Then we have muted action for soybeans, soybean meal. Yet we have modest declines for soybean oil. And then a decline of a little over 1.25% for oats today. Now, what's going on with wheat? Why did wheat surge higher by more than 5.5% today? Well, you know the story about Russia-Ukraine, and now we're getting the news that the Russians are flat out stealing Ukrainian wheat and shipping it to Syria and other allies in the region. So we know that we're short Ukrainian wheat and Russian wheat is sanctioned. And then we have North American wheat, US and Canada. Well, the farmers are not planting wheat because of the shortage of fertilizers. So what do we have now? We got China and India. Both are not exporting any wheat. But we have a deal here, it appears so, between India and Egypt. You see, Egypt is short wheat, India is short fertilizers, so this is a win-win for now, but today we got the news that the U.S. harvest is down. And by the way, the Indian outlook is down, so the output for wheat is going to be down. Now, can India fulfill this deal with Egypt? Who knows? But they certainly need fertilizer, and they cannot get their hand on fertilizers at all, because the majority of these come from Russia and Belarus, both under sanctions. Moving on to the options market, what's going on here in the big casino? We have a new table, folks. Yep, we have a new crap tables. And everybody wins. It's the easiest one out there. And it's called Amazon. See, this is what happens when you do a stock split. You turn your stock into a casino for options gambling. So say goodbye to the stable days of trading in Amazon. Not going to happen anymore. Here it is, Amazon, the hottest table by far in the casino. At around 2 million contracts traded today, about 69% of those were calls. And at number 2, Apple. Nobody likes Apple anymore. At around 875,000 contracts traded today, about 54% of those were calls. At number 3, Tesla, the souffle, at around 450,000 contracts for the name, and about 53% of those were calls. So the volume remains down, with the exception of Amazon, of course. But the ratio, the put-to-call ratio, we're not seeing improvement here yet. Keyword yet. It could happen anytime, but for now, we're not seeing folks buying calls. And this is not going to sustain the rebound. You need a lot of call options buying for this rebound to sustain. And we see another leg higher. Here are the unusual activities that took place in the options market today. Lots of Amazon, so I'm avoiding most of them, but here's a call spread with the expiration date of next week, June 17th. They bought the 135 calls. They sold the 150 calls for Amazon. They paid around $1 a piece for buying the 135 calls. And they received about 15 cents in credit from opening the 150 calls. All in all, the entry cost is down to 85 cents a piece, which make the total spent for this trade at around $1.3 million. Now, what about the ticker PG, Procter & Gamble? They're buying calls here, the 155 calls. calls for the expiration date August 19th, with expectations that the name could move higher by more than 6.5% by then. They paid around $2 apiece to enter this trade, all in all spending around $2.5 million. What about the ticker JNJ for, you guessed it, JNJ? They're buying calls here, the 190 calls for the expiration date August 19th, with expectations that the name could move higher by more than 8% by then. They paid around $1.60 apiece to enter this trade, all in all spending around $1.5 million. And lastly, we have a put spread for the SPY. In this case, they bought the 360 puts and they sold the 330 puts, all for the expiration date July 8th. Now, they paid around $1.15 apiece for buying the 360 puts, and they received in credit about 40 cents apiece from opening the 330 puts. All in all, the entry cost is around 75 cents apiece, and the total spent for the trade is $750,000. Moving on to the heat map analysis, what's going on here? A mixed picture. The majority of the gains were led by the big caps, Google, Amazon, Facebook, Tesla. The Chinese names are outperforming Alibaba, JD, Pinduoduo, the electric vehicle manufacturers from China. And of course, when China moves higher, the Chinese stocks, we see Freeport-McMoRan moving higher. Copper. So there is a correlation here between any good news regarding China and the stock of Freeport-McMoRan. Besides that, it is a mixed picture. You cannot really extract any valuable information from the action that we got today. But the good news is the ticker BX Blackstone is down. Let's see more of that. And of course, the question right now is this going to last? Is there more to this rebound that we've seen before? Because up till Thursday, before the sell-off on Friday, the majority of the gains from the rebound were led by profitless tech, RKK from Mama Cathie Wood, the most shorted stocks, then the S&P and Dow Jones. So what does that say? It says risk on, or at least an attempt for risk on. It also says we have short covering happening, but the question is, will this attempt continue? Because on Friday we got some bad news, a hiccup, the stock market went down led by these names. Today it was all over the place. You cannot really say one way or the other. So we're waiting for, is it going to be the action that we got last Thursday, or is it going to be the action that we got last Friday? We have to talk in the charts analysis. But here it is, the heat map for the ETFs. Again, boring across the board, but at least in the green, modest gains across the board. The only notable decliner was the XBI for biotech, down almost 3% today. When it comes to international markets, the Chinese ETFs are leading the way. The FXY, the MCHI, there is no clear distinction between growth and value today, so nothing to see here, folks. No valuable information at all. So let's do some corporate news for you, and we start with the big event that we got today from Apple, the iMob. You know, the iMob ceased to innovate at all after Steve Jobs died. They decided to become a racketeering company instead, with the monopoly, the scam of the App Store, where Apple says you gotta pay the rent. Otherwise, we send a couple of guys when we crack your kneecaps. If you don't pay the rent, the 30%, we ban you from the store. And of course, your dear beloved government officials are not gonna do anything about it because they're all bought and paid for by Apple. So it is no wonder why that Tim Cook, of course, comes out every few months or so pretending to be James Bond, announcing new innovations and technology. And the sheepies, of course, they go, wow. For what? For new colors? So today we got one of those events, and here it is. Apple's new MacBook Air features the new M2 chip. Wow. Take that, China. Here's another one. Apple unveils the most significant overhaul to its MacBook Air laptop in more than a decade. What is the most significant overhaul? How about new colors? You like aqua blue? Wow. And of course, you have to pay an arm and a leg for the MacBook, the new MacBook. You got to go with the MacBook Pro, though, and that's going to be a minimum of $1,300. In reality, you're going to spend about $2,000, just so you know. Here's another one from the iMob. Apple's tiny charger for the new MacBook Air has an extra USB-C port. Wow. Here's another one. Apple's fitness app no longer requires an Apple Watch. Please dump your Apple Watch. We don't need that revenue at all. But of course, here's the most significant one. Apple adds medication tracking feature to the Health app. Yep, you know where this is going, right? It starts by tracking your medications, and then it becomes tracking your jabs. And you know what's going to happen. Anyways, what about Facebook? Let's talk about Sheryl Sandberg, because she's gone now. But they say she's gone because she's a girl boss and she's going to do something else. She left voluntarily. Oh, really? Remember that boss girl was covering for her ex-boyfriend from the frat house of Activision Blizzard, she asked for The Guardian to take off certain articles showing that his ex filed for a restraining order. Now, did Cheryl manipulate the algos in Facebook to kill that story? Now we're talking. And of course, she's been dumping stock for years now, and it became evident at some point Cheryl is going to leave because Mark Zuckerberg has completely lost his mind. He's all in with the metaverse. That's another disaster, by the way. But we now know that Mrs. Sanderberg was actually under investigation by Zuckerberg. That's why she left. Why? How about this one? Sheryl Sandberg was under investigation of Meta for using corporate resources to plan her wedding. And of course, Sheryl Sandberg says she's really excited for her upcoming wedding. I mean, if I get to steal corporate resources, yeah, I'll be excited too for my wedding because I'm going to spend like a drunken sailor. I'm not paying the bill. Who cares? And of course, now Axios says that the departure of Cheryl is the end of the girl boss era. Well, you know what? Turns out that girl boss is just as corrupt as boy boss. Those extra chromosomes that you have, they don't give you extra integrity. Just FYI. And then let's talk about Twitter and the saga with Reverend Elon Musk, because now he says he can cancel the deal. Not because his stock is down and now he realizes that he's an absolute fool and he made the worst deal in the century. Not because of that, but because now he accuses Twitter of actively resisting his efforts to study fake accounts. Okay? So now we know for sure that Reverend Elon is going to walk away from Twitter. He's not going to buy it at all. It is not worth $44 billion. It is at best worth $20 billion. I wouldn't even pay that, by the way. So the likely outcome is that Reverend Elon is going to walk out of the deal. And ladies and gentlemen, this was yet another one of Reverend Elon Musk pumps and dumps. He gives you false hope. He seduces you in. I'm going to give you free speech, free expression, a diamond ring, and a flat screen TV. And then he bails out on you. He leaves you heartbroken. Are you listening, culties, or not? You're next. He's going to dump you. No doubt about it. He's going to replace you with the Martians he's been playing with for a long time now. Anyways, moving on to the charts, and we start with SPY, the S&P 500 30 minutes chart. Anything to see here? Not at all. Within range, we got a gap higher, faced 416 as resistance again. The traders said, I'm not sure about it, let's take profits right away. And we still have support at 410 in yet another bear flag formation, but you cannot take it with any seriousness because we're still within a range. Even if 410 is broken as support, you're not going to really short until 405 is lost as support. So perhaps the daily chart can offer a better glimpse here. Not really. We're still within the support of 4100. Nothing to see here. The volume is down. Yes, the momentum indicators are flattening for now. They're stalling, consolidating, whatever you want to use. Doesn't matter for me. But the pattern for now remains a bull flag pattern. The chart is asking, hey folks, any buyers? Because if there are buyers, we can go a little higher. We can go to 4,300. But if the buyers don't show up, then the sellers will. We will see 4,100 broken as support, and then we'll take it from there. What about the SPX, the cash index? Similar story here. No change at all. It is a bull flag pattern asking for buyers. If the buyers decide not to show up, then we have the gap at around 4,057.85. But I would wait till 4,000 even. If that's broken, then we have a shorting signal again. What about the Qs? 30 minutes chart for the NASDAQ. Similar story here. We got a gap higher at almost 313. Traders decided to take profits right away, and now the chart is forming another bear flag formation. But it is within range. The support remains 307.41, but the actual support, the hard support, is down at 297.5. Now, if we see 297.5 broken as support, now we're talking that at least the chart should go down to 285. And then once we break that, we get another flush down. But for now, nothing to see here. The bears must be careful. For all you know, they could suck the bears with this kind of action from an intraday perspective, but the buyers at some point show up and we see another leg higher. Be careful here. Here's the daily chart for the continuous contract for the NASDAQ. Anything to see here? Not at all. The resistance remains 12,766. The support at 12,207. The volume is down. The momentum indicators are stalling, but no significant update at all. Now, if we have a break above 12,766, then we're talking that at least we should see a rally all the way to 13,300. Now, if the opposite happens, we see 12,207 broken as support, then we're going down to retest 11,689 and perhaps the lows of that formation. What about the IWM, the Russell 2000 30 minutes chart? If you believe in the theory that the IWM is the leading indicator, then the bulls have the advantage, because all what the IWM did today is consolidating at around 188 between support and resistance. That's all there is. No negative formation here at all. What about the Dixie, the dollar index, from a daily chart perspective? Now, if the Dixie pops higher and it recaptures 103 as support, you're going to start to see weakness in the equities market. So keep your eyes on the dollar, and perhaps the consolidation that we're seeing right now in the SPY and the Qs is the market's way to watch out for the dollar index. In the beginning, it said, yes, let's do a rebound because the dollar went down. But now it looks at the dollar's chart and says, I'm not sure about that. I'm not sure it's going to go down. Maybe it's going to pop higher, above 103. And that could mark the end of the rebound that we saw since last week. What about gold? Gold is maintaining the higher lows pattern for now. But if we see 1,840 lost the support, forget about it, we're going down. And that will happen, of course, when the US dollar pops higher above 103. What about crude? UK oil, Brent, what's going on here from a 4 hours perspective? For now, the pattern appears to be a bull flag consolidation. But if 118 is broken as support, that bull flag goes down the toilet, and perhaps we will see another retest of 114 in crude. But for now, if we see the bull flag pattern playing out, the target becomes 124, the previous high. What about the 10-year yield, the daily chart? Whoops. It popped higher today. We have a crossing in the MACD on the RSI, reversing the negative divergences. This is bad news for the Nasdaq, bad news for the equities market in general, because it indicates a more hawkish stance by the Fed. What about the TLT, a weekly chart? What's going on here? Is the ABC pattern still alive? Well, let's get rid of the ABC and let's see. Yep, it's still alive because it did not take the previous lows, but it's not looking good for now. You need to start to see the TLT moving higher. Otherwise, you take the previous lows. That would be an indicator, by the way, that the 10-year yield will pop above 3% once again, and we will see perhaps the top of this, what do we call it, a bounce, a bear market rally in the SPY and the Qs. So these kind of charts are indicators. The 10-year yield, gold, the dollar, most importantly, the VIX. You got to start combining all of what I'm talking about right now and make your trading decisions accordingly. Here's the VIX, a 4 hours chart. Any update here? Of course not. We're still battling 24.29 as support. A break below that number will produce the next leg higher in the SPY. But if we see 24.29 held as support, and the VIX starts to move its way higher, I mean, watch the formation for now. The formation looks to me, at least for now, as it is a saucer bottoming. And if it is, the VIX is going to pop higher, and the SPY is not going to be able to rally again. The bounce is over. What about the VXN? This is not looking good for the Qs, the Nasdaq. You got to break above the sloping line of resistance, number one. Number two, it appears, at least for now, looking at the MACD indicator, that we're about to have a crossing producing green impressions on the histogram. And if that happens, VXN goes higher, the Qs goes down. But we don't have a confirmation yet, keyword yet. What about Apple? What's going on here? A daily chart perspective, still holding at 145 for support, didn't even go down to close the gap, and the bulls would argue that this could be, even if we go down, a reverse head and shoulder formation. So the bears, there's nothing to see here for the bears. The bears are not going to short until we see 138.79 broken as support. What about Tesla? 30 minutes chart. Any update here? Not at all. Still holding over 700. If the chart breaks 700, then you got your shorting signal, and preferably, of course, a daily closing below 700. But if that doesn't happen in a few days or so, guess what? The buyers are going to show up and they're going to close the gap at around, let's say, 775. And lastly, what about tulips? BTC. We got a pop overnight. Is it enough? Of course not. It could be a bull trap. Why? Because we have the previous high at 32,384. You got to close the day. Well, there's no daily closing in BTC, but you got to crack above that decisively, and then we have a legitimate buy signal. But for now, this is not even a risk-on signal because we haven't broken above the previous pop. You got fooled once, they could fool you again. And here's the last chart. Somebody asked me about UNP, Union Pacific, on Twitter. They bought it at 261. They're holding. The stock is down. What do? The fundamentals say not good. Why? Because we're seeing the consumer spending on durable goods moving down. It already peaked and now it is moving down. What does that mean? A company like Union Pacific used to command inflationary power. Yes, They suffered from higher energy costs, but they can pass that extra cost easily to the end consumer. Not anymore. Not anymore. We're seeing the consumer saying we're not going to spend on goods anyways, so the ability, the inflationary power of UNP to pass that extra cost of energy prices to the end consumer, that is limited now to grains. They can do that with grains, but besides that, they cannot command the pricing power that they used to have. Now, when we look at the technicals, here's a weekly chart. You got a trend line, and we are pretty much at the trend line. We got another bounce. When we zoom in, you got the resistance at around, let's say, 230, 233, doesn't matter, and the chart is rebounding for now. If the chart closes the week above 233, and I'm being conservative here, but if it closes the week above this number, then so far so good. We could see a continuation of the rally and the bounce from the trend line. But if the chart pulls back before this target of 230, 233 to be more conservative, then watch out here. The next step is breaking the trend line once and for all. So I wish I could sugarcoat this for you, but you're better off using whatever bounce we're having in the stock market right now to reduce your losses and get out. It's a lot better than holding and hoping that the chart is going to recover to 260 and beyond. What if it breaks the trend line? You're better off reducing your losses and sleeping soundly, and then you can make up your losses by another, perhaps a better opportunity. Sometimes the wisest decision is take the loss, and I've done that repeatedly in my career. Anyways, we're moving on to the conclusion of this video. What do we have on the economic calendar tomorrow? Not a lot. We have, in the US, we have exports, imports, the trade balance, and then we have a reading on consumer credit, but that's about it. Then in Britain, we have the composite and services PMIs. With that, folks, this is all I got for you for now. Thank you for listening. Thank you for watching. I will talk to you again tomorrow.